let's get to Zaid. He's been waiting here. He asked a question moments ago, and we're talking about a position on ADBE. Okay, and let's see here. ADBE, Adobe, we're at 379. Let's call it 380 roughly. And Zaid says, I have a put. Is there a way to repair a put butterfly spread? Put butterfly, 340, 365, 375, expiring on February 21st, bought at a price of 477. All right, so February 21st, we are 345 again. Almost clicked on 245, Zaid. All right, 345, 360, two of those, 370, 5. Gotcha. All right, so I'm assuming this is standard. Sell 2 here, buy 1 there. Okay, and oh, that's going to not do what I want. Oh, there we go. Buy 1. This needs to buy 1. Apologies, I answered that wrong. I know the prices are wrong. Just give me a second. So you said 477. It's probably at a current price about 120. Okay, so that's 192. So maybe put this at about 2. No. 260? Is that going to get me close to the 400? Oh, I need to go higher. I know these aren't your prices. That's all right. I was about to put in 325. Let's see here. 435, 40 cents more. Let's just call it 350. Why not? Okay. Anyways, where are we, ladies and gentlemen? We're in this butterfly position. It costs, there's my cost of 480. Oh, I'm sorry. I'm sorry. I'm so sorry. That's the exact opposite, isn't it? You said a cost. I thought you meant a credit. I think you did this. This was a debit. Is that correct, Zaid? That this was done at a... Okay. Sorry about that. That makes more sense. So, my apologies. Let's put this down to 150. Let's put this up to 210. Well, you probably have more... Your total of 477, I think you mentioned. Oh, no, it was 477. Okay. 210 far. Whatever. Sorry, 420. That's better. 620. $1.50 off, so 0.75. All right, let me just take a look here. We're going to be close. Yeah, okay, we'll put it at 470. There you go. Okay. So, Zaid, you've heard me talk about before. The prices, okay, that's good. Zaid just sent me all the prices, but that's okay. Don't need to worry about that right now in this case. The prices don't matter. We're close to it. We're just 7 cents off. So this is essentially where you are in your position. You're near the max loss, getting to 21 days. You might be able to be liquidating for a little bit less than the maximum loss, okay? And, okay. Let me take a step back. Butterfly position, all call, all put butterfly, doesn't matter. Iron condor, very similar, 4 legs, but it has the table, the plateau in the middle. What essentially you have, I always like to break this down into the construct. I don't look at this necessarily as a put butterfly. What I look at it as is a bull put credit spread that is doing exactly what you want between the 345 bought and the 360 sold. Stocks up here, that bull put credit spread is going to expire worthless. That's not hurting you. What's hurting you? The bear put debit spread on the other side. This is what's hurting you. Now that it's above both strike prices, is there a way to repair it? Well, I don't think your pendulum adjustment is going to work. A pendulum adjustment, we showed that a little bit last week. That usually works if the stock is between the strike prices. What I might do is consider selling to close the 375 and then buying to open, say, a 365 or maybe even another 345. So now I have one bull put spread, 345, 360, and I just converted this bear put debit to a 375, 345. And if that is at a slight profit, then I would take that in a heartbeat. Because I've still got the profit here on this one, changed it to a small profit here, but it's better than the loss at this case. Let's take a look. I can tell you right now, I don't think this pendulum adjustment is going to work. To keep the math the same, I'm going to keep the strike prices the same, that 15-point difference, Zaid, you started with. We're going to sell to close the 375. And again, the prices don't need to be exact because we're still close to the 470 debit. That's really what matters. So what am I going to do? I might consider selling. I think we're too close to expiration for this to work, by the way. This increased in price, but not by much. 375 put, 180 to 203. We're going to sell that, then we're going to buy a 345. No. Okay, I'm sorry. I was just taking them. So I sell one of the 375, buy one of the 345s. That's a pendulum adjustment. We're converting the bear put debit spread portion of your all put butterfly to a bull put credit spread. With a 360 strike remains. You didn't change the pivot. We didn't change the 360 sold strike. No. Okay. I didn't think so. The numbers did not look anywhere close. This would still be a loss of $300 in this case. Okay. You're essentially in two bull put credit spreads now with a cost of 301. That's not going to cut it. Okay, so that didn't work, but that is one idea to sometimes consider. You could consider just closing out, liquidating this bear put debit spread for, unfortunately, a 15-point loss, and just moving it to another bull put spread a few months out in time, or a month out in time. Yeah, you don't have, that's what Sam was saying as well. Don't have enough time in this trade to do the pendulum or really make a good adjustment. You're kind of too close in this situation, and it's a shame. But let's see here. Again, I could close just the bear put debit. So what would I do there? I would close one. Let's see where we would stand. I'm going to add them back in, Zaid. I'm going to buy to close the 360. Sell to close the 375. All right, so I've got to buy my 360 and sell my 375. Okay, good. And we should be about the same as what we saw. This would be about the same as rolling. So where are you now? You're in a position where these puts are going to expire worthless, but you know you're at a loss of 323. Okay, the reason why I did that, Saeed, is to project where our prices are. Okay, so we know now that we're at a loss of 323, and we can leave this bull put open because it's going to expire. Unfortunately, it's at a cost with everything included, so it's a loss. But we can just leave that alone and let the puts expire, unless Adobe falls back below 360 in the next 7 days. Then you'd have to be concerned about that. So with all that in mind, where do you stand now? You've got, don't know the contract size, of course, don't need to know, but you're at a loss of 323 per contract. Now, is there any spread out in time that could make back the 323? Probably, but again, depends on which direction you're targeting, Zaid. Are you now bullish or are you now bearish? Let's go 35 days out in time at 323. Yes, even if I sold the 360 out to March for around 550 and bought the 340, so I'd need a 20-point spread to almost get that $3 back. And that's not even, that's missing it by a little bit. And if you did a 25-point spread, you'd get it. But see, here's the problem with trying to repair these type of credit spreads, condors. When you take near the full loss on the position, when you say, oh, or some guru says, oh, just buy it back and roll out, or buy your bull put back and roll it down. Buy your bear call back and roll it out further in time to get the premium back. In order to get the premium you lost on the leverage spread, you're either going to have to go closer to the current stock price, but still extend the strike difference. So now you're looking at almost a 25. So I'd use the 360 I mentioned and the 330. No, 335. All right, so this is now a 25-point spread instead of the 15-point spreads that you're in. And there's 380 net credit. But the margin requirement's pretty high now. Okay, so in this case, yeah, Saeed, it's a problem a lot of us are looking at. Saeed says the common thought we're all having, I've got to be honest with you, and I say that a lot of us are probably having this. I've had a lot of discussions this week, and Ernie and I have this discussion probably about twice a week. This stock is overbought, but these days stocks are not retreating. Yeah, the market as a whole looks overbought, but no one seems to be pulling back really. Now, I saw, when we went to my homepage, of course, for power options, you saw that my two stocks, it didn't show up well, but Fabrinet took a really big dip, and Yandex did. This was on earnings. And when I saw the report for Yandex come out, I thought it was going to open much lower than this. I thought it was going to be a 10, 15% drop. It's only about a 4% decline. But yeah, all of mine are in the red today. Even though the SPX is up, DJX is down a little bit. But all of these are in the red, and Fabrinet and Yandex got really hurt. The great thing about Yandex is the bulletproof position. And I can do an income method on it right now to increase the bulletproof status and still have a profitable position, not enter into a loss zone. The Fabrinet's a little bit annoying to me right now. She's been taking a hit, and I've reduced the risk, I think, down to 4% on Fabrinet, but it's going the wrong direction. So I may have to do a management technique on that as well. Those are Mary puts I'm in right now. Okay, so that's, sorry, just going to mention that here as far as that, but we've been talking about that. Ernie and I have talked about that also related to that. Sam offers a point here. There's another point I was getting to with this. So here's a wider spread bull put, but if you change direction, if you decided to do a bear call credit spread now to get back that 323 that you'd lose if you liquidated the bear put side of this position, Saeed, if you decided that it was going to be bearish, you go out of the money. See, I'm still trying to be out of the money with this spread. It's 35 days out, 35 days out. But still out of the money, still a good probability, but I'm at a 25-point spread. If you went to the bear call side, you probably still need a 25-point spread. Okay. Sam's thoughts are do another trade in a new stock or an earnings trade like Roku, and then after that trade, potentially in the direction of the stock as you feel it's moving up. Okay, and so that is also another common repair. Ooh, Zaid, that's a tough one. One thing I should have checked now as well. And that's, oh yeah, he said amazing that the tech stocks are on the green from the weekly chart for a while now. Okay, this highlights Sam's point, and I think this is why Sam mentioned it and I didn't look at it. You've got earnings coming up on 3/12. This is one of the, I didn't mention it, of course, because this is one of the reasons why I don't like to trade the butterflies, because a subtle movement one day or direction or the other could end up hurting if you don't manage it right away. But in any case, I had mentioned maybe doing this bull put spread, but you're right, you've got earnings coming up. So from what Sam said and what I said, that means I probably wouldn't do this spread at 20th of March. I'd probably have to go shorter term so that I'm not as affected by the earnings that come out on the 13th, on March 12th, March 13th. So you may want to do shorter term to try to chip away at that, and then by the time you get closer to earnings, maybe consider what Sam said. What does he mean by a strategy around earnings? He's kind of saying don't sell, don't be in an iron condor, don't be in a butterfly in this situation. Do something that leaves the outside open like a straddle or a strangle to try to take advantage of the movement, although it can be pretty expensive. Okay. Oh, Sam made a comment. There's a lot of investors today and in the different markets have been losing money because there's no pronounced trend. Okay. Zaid comments back on our butterfly. It's true that expiration is very close in repair. Any recommendation on when, I'm sorry, when is the ideal time to repair in a butterfly? Okay. I don't trade butterflies. I'm going to be honest with you. And part of the reason why is I don't like that, I don't like the profit and loss chart. I'm not a good neutral trader. And it's a neutral position. Whether you're doing all call, all put, iron butterflies, anything with that peak profit and loss chart, it is not my forte. I like to be more directional. I'm just going to be honest with you. And I know the allure of these type of positions. I understand it. You can get a structure on a trade with a relatively strong max profit. What am I doing here? I'm selling to, I'm selling to at the 360s. I'm sorry. Okay, I'm sorry. So I get that in that case. I see the idea of the good risk to reward ratio. It didn't draw for me. All right. Yeah, so see here, and this one, if I open this spread right now today, I'm at max loss, so I'm not going to do it. But in this case, it's looking for a maximum risk of 190 for a max profit of 1310 with this structure. I get the idea. You say low risk. It's actually a 10 to 1 or 1 to 10 risk-reward ratio almost. Okay, 8 to 1 risk-reward ratio instead of a 1 to 8 risk-reward ratio instead of an 8 to 1 that you see with an out-of-the-money credit spread. I get the appeal. But if you just opened butterflies and didn't do anything, didn't even watch them, and just had them close at expiration without worrying about money or cash or anything, I'd say only 5% of the time you're going to be here. 10 to 15% of the time you're going to be here. Maybe 35% of the time you're going to be here. And then 40 to 45% of the time you're going to be here. That might not add up to 100, but you get the idea. Is that very infrequently are you getting this. The key to this position is management, not the structure. And you had mentioned, Zaid, to sort of answer your question, you had heard me say that this one adjustment that I use on my credit spreads, that pendulum adjustment here, where I might move the lower, leave the short as is to convert a bull to a bear, the losing spread into a winning spread, that works when the stock is between the strike prices or just a little bit above the short option. Now, this is why I particularly don't like this structure, because normally I'd be adjusting one of these short legs if the stock's within 1% of the short put strike price or the short call strike price in a bear call credit spread. Well, I'm starting off already there. That doesn't make sense. So the one thing I would say is that once you hit the halfway point, you've got to consider halfway between your strikes. I'd say maybe even one strike above your short put or your short call strike price in this butterfly. So at 360, once it hit 365, I'm probably considering management. What's hurting me at this point? The long put that's decaying, but really that extra short put I have here. Remember, the bull put's still doing what I want. But at 365, 367.50, I've got to start considering doing something with this short put because that's what's starting to hurt me the most. Okay? So I don't have a good answer for you because I don't trade those. I don't trade these, and this is the reason why, because it sort of goes against my trading structure and my trading plan. And so that's why I don't trade the butterflies directly. But I definitely would say I would not allow this position to have gone above both strike prices. That is way, way too far. Okay, that's I would have managed that before then or closed that short before then, before letting it go above both strike prices on this bear put side or on the bear call side if I was in an all call. Okay, so I do have a question from Randy, but I'm going to take David first. We're getting close to 6 p.m. here, so I've got to take this. All right. We sort of had a customer ask, it wasn't David, we had a customer ask this question last week regarding a specific spread on a specific stock. I have to be extraordinarily clear. I can't say, is this a good trade? I can't say it's a trade I recommend. I cannot do that. David's not specifically asking that, but he says, Mike, there's a bull put spread on Tesla February 28th, 705, 700 weekly bull put. What is your take on this trade? Do you think it's a safe trade? Your opinion. Okay, I cannot tell you what is or what is not a good trade. Okay, I can't give you that. Here's what we're going to do. We're going to look at the spread. You said Tesla, right? And Randy, I do see your question. I'll go there. 28th of February, my apologies. I haven't been other than what we've shown with the profit and loss chart, I haven't been following Tesla as far as what else is coming. So you're talking about a 705, 700 bull put credit spread, and you saw a net credit of 71 cents. Sorry for the scrolling, folks. So here, let's just set the structure to begin with. We're at 800. You're 95 points out of the money. I did not get the price that you got. That got 250. Somehow you had 71 cents with the weird bid-ask spreads that came out. Doesn't look like that's the case, but let's get 71 cents for you. So that would be 764. Sorry, 764. Okay. So again, I don't even think I'm getting the 71 cent premium. It's a 16.6% return for a 14-day trade. Definitely in my wheelhouse, meaning I usually look for a target around 12 to 15%. That's okay. What's the probability above my short put? Okay, I'm sorry. Going to go to research, option research. 86.1, right above my 85% rule that I look for in my screen. Okay, I went to the wrong page. Where's Oh, sorry. Okay, so 2 out of 3 things are good right now. Stock itself, I need to go to the research page to take a look. Okay, so I know we're past earnings, but I'm looking to see if there's anything else here event-wise. Doesn't look like earnings or anything else is coming out. Okay. And then take a look at the chart. Okay, so all I can tell you on this particular one is the basic, oh, sorry, you'd be at 705, so that's more along these lines here. So you've got a spread here. You're 95 points out of the money, but you've seen a 150-point move in the stock in a 3-day period. And we've seen, of course, the big, is there a big drop here? 60 to 5, oh, yeah. There's a 60, almost 50-point drop here between that period. Okay, MACD is condensing. That's interesting because there was a large gap, so it's still moving up in that case. But all I can say on this is that it matches the return I look for. It matches the probability I look for in my search screen for the bull puts that I use. 85% probability or higher. 9% return or higher, but I typically like to target around that range. Looking at the numbers right now, I could get nowhere near that 71 cents in net credit. There might have been some weird last-minute exchange on the bid-ask spread. We'd have to check it on Tuesday to see. No earnings between now and expiration, that's good, but on a stock that has seen those kind of movements, I'm not sure, okay? I'm not sure, but I cannot comment if I think it's a good trade. All I can say is that it matches 3 of the main option criteria I would look for in my bull put credit spread search. That's an 85% probability, a return of return of above 9%, but targeting that 12 to 15% range, and with the good range percentage out of the money. And you have to decide if that's far enough out of the money for this particular stock based on the movements when you've seen. Mark helps me out here. He says, cardinal rule on the butterflies, take the easy gain if the trade is being overrun. And that's what I think he means there is, in that case, is that you got to target maybe that situation of rolling the position there. Okay, so Randy left, but let's take a look. Now, Randy says, overall concept is bear call spreads, buy a bear call spread, sell a naked put. Could you show how to enter the following? July 17th, 2020, buy an 1150 put and sell a 1050 put, so that's a bull put credit spread, then sell a March 2020 1050 put. Yeah, that's going to, it's not a synthetic long stock, but it's kind of interesting. Okay, so I don't know what stock you were talking about. I think GT is in that price range unless they fell, but let me take a look. Okay, they're a little bit lower. But from what Randy was asking is going to a July 2020. July 17th, 2020, my apologies. Buy an 1150 and sell a 1050. Oh, it's a bear put debit, so maybe we're looking at it. I apologize. Okay. All right, but in this case, let's go ahead and run it. So I'm going to buy, oh, they don't offer 50s. I thought they did. They do short term, they don't long term. Okay, so on GT, I can't show that. But in any case, let's just do it this way. 11 and 10. And okay here, so selling the lower, buying the higher, that's a bear put debit spread that's actually out of the money, speculative. You're going to hedge that by selling a near-term March 10 in this case. Okay, 10 or 15 cents, okay? All right, so this is what it would look like. You're doing a bear put debit with an extra naked put. You're going to have a margin requirement on this naked put because it's not protected by the other long. So you'd have 1,000 management there. With these prices, and I know it's not the stock you're talking about, Randy, I don't know if it's worth it. I'd rather just do a shorter term bull put credit spread in this case and not risk an upper and lower break even. You didn't, I don't want to say ruin, that's a rude comment, but you're sort of negating the potential profit of this bear put debit spread if you expect the stock to drop by selling the other naked put position short term. Now, sure, it could still expire if the stock stays up and you've lowered the cost basis on the bear put debit. But if the market turns, man, that's a tough one. You've negated the benefit of the bear put debit spread in the short term with that naked put position. I don't know if I like this one, to be honest with you, Randy. I don't know if I like the structure of this trade as it is. I may just be tempted to do the straight bear put debit spread long term. In this case, one of those 1-to-1 risk-reward ratios. I'm not going to say sell a naked call in that case either as a double bearish position, but maybe add a short-term bear call spread if that's your overall goal here, or you don't think the stock's going to hit 10, maybe do a short-term bull put spread rather than just a naked put. You won't get a lot of premium in that case, but you won't have negated the benefits of this 1-to-1 bear put debit spread that's out of the money, kind of speculative in this case. I know I'm looking at the wrong stock. I apologize. So this probably isn't as speculative as it looks to me. But just the structure by itself here in this bear put debit spread, by selling the naked put, if the stock goes in the direction you want, which is mostly towards the bear side, not the bull side, then I think you've negated the benefits here for a short-term naked put that might only give you 10, 15, or 20 cents. Not even 20. It's probably only 10 or 15 cents because of the low price nature of the securities we're talking about. I'd probably want to do a bull put spread rather than the naked put. And I'm not saying that that's going to be beneficial. You'd said the March here. So bull put, do an 11.10. I might, oh, here I am getting 20, 30 cents for the bull put in that case. But I think at least here, I don't have that continuous loss to the downside from the naked put position, negating, again, the profit of the bear put debit spread in that structure. So I'd probably be more apt to do it as a bull put credit spread short term as opposed to the bear put debit spread with the naked put, even in the short term, although you expect you might have a high probability of it expiring worthless in that case. Okay, so that's my thoughts on that. All right, well, ladies and gentlemen, we're just past 6 o'clock here. Oh, sorry about that. Oh, I lost a slide. That's okay. Well, one thing I always have to say at this point we have a slide for is I just want to, of course, remind everyone that today's discussion are my thoughts on your questions to promote options knowledge, education, and trading education. None of these stocks or positions discussed today should be taken as any recommendation of what to sell or buy. Options do involve risk and may not be suitable for all investors. Now, if you did like what you saw on some of the search tool capabilities, some things we saw with the profit and loss chart, discussions of accessing the full webinars there, that is a public page we talked about earlier, thepowerup.com/webinars.asp. But again, if you want to take access to the tools, play around, start using the portfolio and more, just remember you can take a 14-day free trial at any time. Just go to powerup.com, put in your name and email address, no billing info is required. After that, the subscriptions start off at about $45 per month for the lower end of day service, but we do offer a 20-minute delayed and real-time service as well. As I mentioned, you can check out the webinars at any time. We'll try to get some of these discussions posted for you over the weekend, and then, of course, the rest by Monday. But you can always see the archived webinars, powerup.com/webinars.asp, or check us out on the blog, blog.powerup.com. If you do think of any questions later on the weekend or at any time, remember you can always email us to support@powerup.com or support@radioactivetrading.com, or you can also call us during market hours. And remember, those of you who are on a trial or a subscription, you can schedule a coaching session at any time just under the main home tab. Click on free coaching link, and you can schedule a time to talk with myself or Ernie. Sam says, thank you, sir, and have a wonderful weekend. Thank you, Sam. Thank you for your comments and for your assistance on some of these discussions. Thank you, David. I'm sorry I can't go more in depth into the discussion on the bull put credit spread. All I can tell you is that it matches what I would generally look for and what are in my search criteria for the bull put weeklies. But I can't give any direct advice. Is it safe or is it not? You have to consider the underlying stock itself, what your goals are, and is it safe for you? I can say that it does match the return, the probability, and some of the technical indicators that are used on our default search, of course, which is why you might have seen it in that case. And Jim, thank you for your questions. Fernando, thank you for your questions, and of course your comments with the other discussions as well. Ladies and gentlemen, have a great extended weekend. Markets will be closed, of course, again on Monday. As we mentioned, February 17th. We'll be back at it on February 18th. I hope to see you all sometime soon next week. Happy trading. Take care. Good night.